You launched a new 4,300 target on the S&P 500, about, I guess, 16 or 18% higher from here. But now we've got this new strain of coronavirus in the UK, hard lockdown, Dow futures off 500 points. Any way to model this new risk?
Brian, we've got to say that the most important thing is take it into context. Taking it in context, we've been here before in a worse manner in terms of not knowing what we had to combat it. In this case, we know we've got a lot of science, a lot of technology aiding that science. We can just imagine scientists have already been modeling the morphed virus at this point. We'd also say our recollection is that this crossed the tape before the weekend with Johnson in the UK increasing the extent of the lockdown. So we're a little bit surprised that the market is looking as stunned as it is by it. And we think it likely will discount this through the day.
Well, and I'll get to Lindsay in a second, John. Maybe it's because it is a holiday shortened week. Friday's Christmas, half day Thursday. Everybody's probably made a lot of money in almost every asset class this year. Maybe it's just that nervousness. Let's take a little money off the table. The VIX right now is up more than 30%. This idea, if we don't know and we've already made a bunch of money, why not put a little away, protect yourself a bit?
Yep, it's an opportunity to take some money off the table. Okay, in terms of without FOMO or a risk of fear of missing out in the middle of a bull market. But we've got to say, if we use March 23rd as a model, March 23rd, after that, the market rallied 17% in the next 3 days. So you want to be careful trying to time going in and out of a bull market, which appears to be in progress.
Yeah, you know, Lindsay, listen, I don't envy your job as well because you're trying to model this economy. You're plugging in the numbers. You're trying to figure out, okay, vaccines are coming out. Reopenings are happening here. Slowly, we're going to get there, kind of see the finish line. Now, of course, we've got this new strain. Who knows where it will go, how transmissible it might be, and if the vaccines work. It appears they do. It's an early read. How much does this throw the economic reopening story in the spring sort of up in the air, if at all, by the way?
Oh, it certainly does. And I think it highlights the dichotomy in the economy that we're seeing at this point. On the one hand, we did see a strong recovery in the third quarter, which in some ways has carried forward into the fourth quarter. We saw strength in manufacturing, auto sales, and of course, some improvement in the labor market. On the other hand, we've seen a slowdown in the pace of hiring. We've seen consumers pull back. And you layer on now new concerns about this resurgence of the virus or a second strain of the virus, and that could compound the difficulties that we've seen on businesses to reopen, individuals to return to work. And so right now, when we're looking at what this means for growth, I do think there's enough strength in October and November to carry the fourth quarter. But when we look out to the first quarter of the new year, depending on the depth and duration of this second round resurgence and the subsequent policy measures put in place, it's going to be increasingly difficult for the U.S. economy to remain in positive territory, potentially falling back into negative growth profile as we look out to the start of the year.
Yeah, the markets, and again, if we could throw it up, Lindsay, United, you might have heard us going into break. United Airlines down 10% right now. Carnival Cruise Lines, all the travel stocks are just being, punched in the gut, if you will, again, because of this new thing. What more do we need? How do you kind of have to sit back and wait to see how this shakes out? What do you know? What do you not know?
Well, I think this is just a reminder that this is a health crisis, not a market crisis, meaning there's no singular, there's no all-encompassing policy that we can deploy from the federal government or the Federal Reserve that will get the economy back to an upward trajectory on a sustained basis. It really comes down to a health solution, having a meaningful way of separating the healthy from the sick. And again, this is just a reminder that the virus itself is really going to dictate the path to recovery, which at this point seems to be much longer, much bumpier, and much uncertain than what we previously thought or what has been previously priced into the marketplace.
Yeah, I mean, we said it almost a year ago, John, back in March of this year, that health data is the only data that matters. It's the real new sort of economic data. I know you just rolled it out, but you're keeping that $4,300 price target as well. You're still bullish for the coming year, even with this new COVID wrinkle thrown in.
Yeah, absolutely. At this point, Brian, we think these setbacks, bumps in the road are not uncommon when you're dealing with something like this COVID-19 virus. So our expectations would be that this will be not only discounted by the markets, but will be responded to by scientists who've sure proven themselves capable of producing a vaccine in around 9 months, not in a year as many people thought, or 2 years as others thought, or even 4 years as some thought. So we have a good faith and consideration that this is a bump in the road and one to be recognized without a doubt. But it may be more of an opportunity to buy babies that get thrown out with the bathwater than to run from the market at this point.
Shepard Smith here. Thanks for watching CNBC on YouTube.